Hey, Nick, it's that time of year. We're talking year-end tax strategies. Only a few months left right now, so it's time to start planning. And we are still very firmly in bear market territory. Stocks and bonds are sharply negative. In fact, the market has lost nearly a quarter of its value since the beginning of the year. So let's talk about how those negatives, though, offer some unique opportunities. And the first one on your list is tax loss harvesting. What is that?
Right. So tax loss harvesting, it goes very well for any long-term gains that you may have in some of your portfolios. Investments that you've held for the last 10 years, but have no way of getting those funds out without being taxed. Looking at, being in a bear market right now, looking at some of those investments that may have had some of those losses this year, we compare that with some of those gains, to try to offset some of the taxes, going into the end of the year. That may be a very good strategy for some people that have some of those long-term capital gains. Another strategy in the tax loss harvesting is just straight rebalancing. Looking at minimizing. We might have gotten a little bit heavy on the bonds this year, because of equities falling. Going back in and rebalancing those portfolios to make them more even or more set up to the way they were, previous to this year. Maybe another strategy, as well as tax loss harvesting to be very good.
Okay. And then next on the list is beware phantom income. I don't know if this is to correspond with Halloween, but it sounds very scary.
Yeah. So this is something that's not really controllable by the individual. This has to go with the mutual fund companies and their losses that they have. It could be that you buy into a mutual fund now and they turn around and they sell some of these funds that may have some underlying assets that have some gains in here, and you could be paying capital gains on something that you may have had an actual dollar loss going into the end of the year. So something to be careful of at the front end of a bear market. We're buying into these assets, they're selling off some of their gains to buy some of their losers, to rebalance their portfolio as well.
Right. Okay. And then last, something that we've talked about many times for its tax benefits, considering Roth conversions. Why would we do that again?
Right. So each and every year we want to take advantage of the IRS tax tables, and no better year than to do it when the markets are down, because now all of a sudden we're pulling some assets out of IRA or moving it from an IRA bucket into a Roth IRA. And we know, it's the old cliche saying that markets are going to come back. It just takes time. But we look back to every previous market correction, and the markets have moved higher. So it doesn't feel like that right now, but eventually we're going to get to that point where markets move higher again. And it makes more sense, that as those markets move back higher, that we do it in a tax advantage or an after-tax account like a Roth IRA. So making Roth conversions here at the end of the year is still vitally important to a lot of people to take advantage of the IRS tax code.
Well said. Well, this is important. And again, that plan should start earlier rather than later. So, Nick, if somebody would like to talk more about these strategies, what's the best way to reach you?
Right. So you can reach out to us at our website, iconberryretirement.com. You can schedule an appointment right on our calendar out there, or you can give us a call, 937-498-1128, and schedule an appointment that way.
Okay. Nick, thank you.
Thanks, Erin.